Hello traders, James Stanley with StoneX and Forex.com. Technical analysis doesn't work. It's a phrase I see pretty common on social media or in some venues of trading education, and I just want to start this video by addressing that one. Technical analysis doesn't work. Technical analysis doesn't have a job. Technical analysis is a way of looking at something. It's like statistical analysis. It's just a way of interacting with the world. It's a way of construing data. It doesn't have a job. The trader has a job. And in some cases, that can involve incorporating technical analysis. But I think the more dangerous aspect of this statement is to imply that there is something that is predictive. To say that technical analysis doesn't work would seem to mean that there is something that does work from that scepter, be it fundamental analysis or whatever. Now, I've been around markets for more than 20 years, and I'm firmly of the belief that there is nothing that is predictive, because if it was predictive, the big banks would have that cornered. They'd have it arbed out, and it would never be available to somebody like me. But I don't think that anything is predictive when it comes to market analysis or trading. I think about the best that I can do is to look for areas where I could try to risk $1 in effort of making $2. And that is where technical analysis is beneficial. Now, in this video, I want to talk about what I call the 2 tenets of technical analysis, and I want to use the actual example that we have in gold. When I last looked at gold for StoneX TV, gold was vying to get above the 3,800 level. As of this video right now, it's well above 4,200. It's making a fast run to 4,300, and there's still no end in sight. But I think this illustrates well those 2 tenets of technical analysis. The first tenet is that trends exist, and there's often a reason for it. Now, we can look at the headlines, we can look at the data, the backdrop, etc., and we could deduce what that reason might be, but neither the chart nor the headlines are going to tell us when that reason is over, when that reason is done, or when that move is ready to reverse. All we could do is notice that a trend exists, there's a reason for it, and in incorporating that analysis, we could look for ways to try to buy low and sell high. Or in the terms of a downtrend, we can look to sell high and cover low. That's, I think, about the best we can do with that. Trends exist, there's a reason for it, and the chart could help us to see that trend. It could help us to notice that bias so that we might be able to incorporate it and get on the right side of that move. The second, and this is where I think traders can actually incorporate some strategy, support and resistance matter. And this speaks to item 1. When we have a budding uptrend or a building trend, a pullback to a higher low will often be followed by a higher high. That's the pricing in of that bullish context, that bullish backdrop, that bullish reason for the trend continuing to run. And it's the build of higher highs and higher lows that allow for that bullish trend. But perhaps more importantly than that is for a trader looking to take a certain approach into an otherwise uncertain world, it's the pullback to the higher low that represents opportunity. So when we have a move such as we have in gold right now, there's really just 2 options. Either 1, chase, throw caution to the wind, and hope that that trend might continue. The risk being that you might end up buying a top. The second is to wait, look for a pullback. But then you may never get an opportunity to enter. That pullback might not come. But I think with time, most traders will default their bias towards the second outcome, because a missed opportunity is much more palatable than losing capital, especially losing capital because your excitement got the best of you, your fear of missing out got the best of you. That's the kind of thing you could end up beating yourself up over. And at the end of the day, really, it's trading psychology that allows for longevity. But let's look at this move in gold and to see how we might be able to meld these 2 tenets together in taking a risk-efficient approach to a move that has largely been parabolic. So this move started really February of last year. And I've talked about this, again, on these StoneX TV videos, where we had that comment from Austin Goolsbee where he said, let's not get all flipped out about one inflation report. It wasn't one inflation report, but I digress. It was the fact that the Fed was looking to push rate cuts, even with inflation remaining high, that helped compel this move in gold. That's really what started and triggered the entire debasement trade that hasn't really calmed since. We had this one episode of pullback in the last 2 months of 2024. It forms a beautiful bull pennant that broke out in 2025. That rally in 2025 stalls right at the 3,500 level. The pullback of which holds support right at prior resistance. And then we got a breakout around Jerome Powell's speech at Jackson Hole. And then another continuation of that trend. And you'll notice, again, this week has been especially bullish. Is the trend overbought? Absolutely. Looking at RSI on the weekly chart, you'll notice that RSI right now is above that 85 level, which is a pretty rare instance. We haven't seen something like that since like August of 2019. Even then, I don't know, right around 85 then, but massively overbought. But that doesn't mean that it has to come down. It doesn't mean that the trend is over yet. And it doesn't mean that there's wherewithal to forecast or look for a reversal. I think about the best that we could do at this point is to try to look for a pullback. But again, if I wait for price to push all the way back to like 3,500 for prior support or support at prior resistance, that's a setup that may never come. And if it does come, if we see gold shed almost $800, there might be a shifting backdrop in there. So one option is to take a shorter term look at the matter. And this is very similar to what I had done in that video a couple of weeks ago, where at the time, gold was vying to get above 3,800 an ounce, which is all the way down here. Gold finally got above 3,800 an ounce and even ran for a bit, but look at what happened after. That level comes into support, helps to mark a low, and then bulls take it up to yet another fresh high, and then a higher low, then another higher high and higher low, and eventually a 4K break. And then after that 4K break, we get a pullback with a hold of support right at prior resistance turn support. That's right around the 39.50 area. Interestingly, on social media, this was just a week ago. When we had that hold of support, I started to see people get bearish all of a sudden. Now, here's the way that you could take a risk-efficient approach into trading the reversal. This bullish structure that had run found this resistance right here, like right around 40.50, up to around 40.60. And then we had that pullback. Now, if you look at that on like an hourly chart, you could justify that as a short-term lower low. The way to work the reversal setup is to then say we had this higher low at 4,000. A test of that opens the door for resistance. But if it breaks above, the bearish thesis is wrong. And you don't want to sit around and watch this thing rip in your face. Instead, you could place a stop so that you can get out of there relatively soon. So that as these higher lows build and as that bullish trend takes off, at least you can mitigate the damage from trying to work off that reversal. Again, all an effort of trying to risk $1 and effort of making $2. But the reversal wasn't really that attractive because if you look at this off the daily, that was just a moderate pullback that ended up launching into another continuation move. And then we had a break above 4K, a break above 4,100. 4,100 then becomes support right in here. Now, this is the more pertinent matter. This is really short term. I'm shooting this on Thursday afternoon in the US. So by the time you watch this video, these levels may already be traded out. But this is the way that you could take, again, that shorter term approach using multiple time frame analysis to try to trade in the direction of the trend in a risk efficient way. When looking at this hourly chart, there are a few different areas of resistance, turn support, or resistance, turn support, or resistance that hasn't yet been tested as support. You'll notice we're getting very close to the 4,300 psychological level. Once we test, or as we test around that 4,300 level, this can induce profit taking from longs that have been riding the wave along the way. Again, that positioning sentiment element could allow for perhaps a bit of pullback. It's what bulls do on the pullback that's going to show us continuation potential. And right now, that is the zone that would be most attractive for buyers to defend, right around 42.42 to 42.46, just inside of the 42.50 psychological level, which I'm going to span up there, to consider that as a zone. Now, here's the benefit of that to me. If we get the pullback to 42.50, I can monitor this from like a 4-hour chart, maybe an hourly chart, although an hourly is super short term, very susceptible to noise because of small sample sizes, but ideally it would be around a 4-hour chart where I could then gauge response on a test of that zone of prior resistance. Right? You can see very clearly where sellers were responding to that with these upper wicks until we had the breakout. But what I want to see is very similar to what is showed right here. You see these underside wicks? We had that pullback the buyers responded to aggressively. And then bulls still weren't ready to take it off. We had another pullback. Again, buyers respond pretty aggressively. This time we have a higher low, and then another higher low, and then another higher low. Here, let me show you exactly where these lows line up. That low is right at 4164.81. Again, there's an open door for bears to push a deeper reversal. Instead, bulls come in, hold this at a higher low, 4176.68. Then another higher low, right at the prior high, 4179.73. Right at that prior high. And then the next time, we can't even get down there. Bulls aren't willing to miss the boat. They jump in early, 4182.59. We get this series of higher lows on the hourly chart, and then bam, fresh higher high. The pullback of which holds support right in this zone of prior resistance, and then up we go. So, ideally, a pullback to this 42.42 to 42.50 zone would be defended by bulls, and I'd want to see some reaction like this, illustrating buyers coming in. The effort of that allows me to put a stop below that group of wicks so that as long as it holds, as long as that sequence remains in place, as long as buyers remain in control, I could look for continuation. And I know exactly how much I could factor my targets at because I know exactly how much the risk outlay is going to cost me. And if it does take a bath, if it does reverse, if it does take me out, at that point, I'm then mitigating risk. I don't have to sit here in an upside down position just hoping that it might turn around for me. Instead, no. Be aggressive. I'm looking for a pullback to another level of support until buyers ultimately could take back over again. Now, until we have evidence of reversal, and what I'd want to see for evidence of reversal is like sellers pushing aggressive lower lows below this 4100 spot that was well defended. Until I have evidence of that, I want to continue to bias this as bullish because that trend has been so incredibly strong and there's no reason to expect that it's yet complete. Again, the world is always going to be uncertain. To imply that there is anything, any form of analysis that quote-unquote works as predictive is a massive misnomer. So I think about the best that we could do is look at what's happened, not expect history to repeat, but maybe to rhyme a little bit, and try to find ways to risk $1 in effort of making 2 or 3 or 4 so that I don't even need to bat 50% to allow for a profitable net over the long term. The trend that we have in gold is exceptional, and there's no reason yet to think that it's over. And until I have that reason, I'm going to continue to look for pullbacks. But that's what I have for today. Thank you for your time, and as always, happy trading, ladies and gentlemen.